I got an ironic question to ask you here. So
Sure.
you painted a picture at the beginning of the trader who's fumbling with the order entry and making mistakes that way, which really touched me because you painted a picture of me pretty accurately. But the other
I was
version of
talking about
me,
you, Tom. What do you mean?
Every good trader I know, at least.
the flip side of that is that when something is too easy for me to get in and out of the trade, well, I'm going to be pressing those buttons all the time, like way too quickly.
Sure.
And I imagine that this is where the other part of the package with push button trading comes into play, where they actually get to work with you, so you can help them. Like, all right, you get the fumble and bumble out of the way. Now we have to handle your emotions, so you can get your head in the game. Um, could you tell us a little bit about what are the kinds of things that you tackle with new traders in order to help them get over that hump?
Yeah, so really the very first objective is to get to 200 trades in a back trading simulated environment. Now, this is a paper trading account, of course.
Well, hey, Matt, thanks very much for joining us. I'm super excited to cover push button trading today. For those that are just diving in, I have on with me today the founder of Push Button Trading, Matt DeLong. We're going to talk a little bit about how this actually works within MetaTrader 5, and then really excited to cover how that actually automatically connects to TradersPost as well. So you can very quickly execute your trades from Matt's environment off to any asset class within TradersPost. So without further ado, Matt, please kick us off. I'd love to hear about what you started to build here.
Sure. Thanks so much, Mike. So push button trading is basically it's a technology plugin, and it works inside MetaTrader 5. Some of you guys may be familiar with MetaTrader 4. MetaTrader 5 been around 13, 14 years. And what it is, it's a plugin that literally automatically calculates a bunch of things for you that typically tend to bog down new traders, right? So things like the order quantity and calculating your risk and your entry price, your stop loss, your take profit, like all those types of things are literally at a kind of a couple click kind of reach. And so things like how much to trade as far as a quantity, how many shares. Let's talk about Tesla, one of my favorites, right? Do I buy 250 shares? Do I buy 2,000 shares? Like how much do I need to buy? Well, most people who have been trading a while understand risk management, which is another thing that typically bogs down new traders. And so the number of shares you buy is kind of a formula, right? It's a risk calculation. So Mike, if you were to learn how to trade, I know you're a ninja, but if you were to learn for the very first time and say, hey, I want to risk X number of dollars, let's say $500. I only want to lose $500 if I'm wrong. And if I win, I want to make more than 500, right? And so the idea is you can say risk is 500. My profit taker will be a calculation. That's 1.2 or 1.4. You can edit it. It's X number. It's a percentage of your risk. So if your risk is 500 and your profit taker, let's say, is 1.2, that means 1.2 times your 500. That will be how much you make in your profit. And those are all calculated things. And usually in the old days, like traders would have calculators and they would manually calculate all this. Some of them have like little shortcuts, but still, a lot of people will still use, they're going to always buy 1,000 shares or 10,000 shares. And ultimately, it becomes a just random size risk, right? You can imagine a really big risk trade where you lose 2 or 3 times in a row, and then a small risk trade where you win 2 or 3 times in a row. Your net result is you're still down, you're still negative, right? And so the first thing it does, of course, is it calculates how much to trade, your quantity, your volume. The second thing it does is it helps you determine where to enter, and it doesn't have any AI built in. But what it does do is it has a couple buttons where you can say, I want to do a bullish breakout or a bearish reversal. And it's got 4 different things: bullish, bearish, breakout, or reversal. And it actually calculates based on the math. And there's some settings for padding and some other things that you can configure and personalize. But that's the first thing, again, is the quantity, volume. Second thing is your entry price. The third thing it does is your stop loss. And for new traders, that's pretty terrifying. If you do it too tight, then you get kicked out of the trade and the trade ends up working in your favor. If you do it too loose, it takes forever and it just goes sideways all day, right? Too much wiggle room on a trade or too little. Either way, you're kind of, it's a challenge for new traders. And then finally, the fourth thing it does is your take profit. It automatically calculates that. And as we just discussed, $500 of risk, 1.4 times that, or 1.2, it's configurable. You can change those settings, click the buttons, and boom, the trades are literally calculated, and not only calculated, but also put into your broker. Now, the previous company that I worked with, we actually had a Google spreadsheet where you'd have to like enter some numbers and it'd calculate all the stuff for you. And you have to take those numbers and manually input the order into MetaTrader 5. Nothing wrong with that. People still do that to this day. However, new traders, again, the struggle of math and trying to calculate and compute and what are these formulas and how does this work? Even though a Google spreadsheet can kind of create some shortcuts, you're still kind of manually doing these calculations. You got to pull some numbers out, put it in a spreadsheet, then it tells you something else that you then put into an order. And so again, this is what push button does, is it kind of minimizes all of that. And I can show you guys here in a sec, because I know you're curious to see what it looks like. But this tool is basically really just for brand new traders or people who maybe are a little bit slow at order entry. They want to learn how to trade fast, or really anyone who wants an easy way to learn the what some of my previous students have said is the fumble and bumble of order entry. You kind of eliminates all that, and that's half the struggle for new traders, right? The math. My 20-year-old used to say in high school, she's graduated now, of course, but in high school she used to say math is mental abuse towards humans, right? And so some people have PTSD when it comes to formulas or algebra, right? And so that's kind of what I've built here in a technology tool that plugs onto your charts, and it kind of helps you. It's got a whole bunch of benefits, but that's some of the primary features.
Yeah, I'm definitely looking forward to seeing it. But obviously, you've tapped into a couple areas that are super relevant in my mind, and resonate with me being a trader for almost 10 years now. Even now today, I'll still mess up on an entry just because I clicked the wrong button. I'll go short when I meant to go long, or
Sure.
put in the wrong number of contracts, or fat fingered something. And the reality is, before we actually ever even enter a trade, we've typically done most of the math. We've already decided how much risk we want to take, how far away from price action we want to be. We've done all these measurements. We just want one click to be in and have the trade execute the way we expect from that point forward, without having to nurture or manage the trade. Which also means, in theory, I could be trading a few different things at the same time a little bit quicker that way as well.
Right. Yep.
That's an obvious advantage, but yeah, we'd love to see this.
Yeah. And ultimately it's a really hard conversation when you're doing a one-on-one conversation with someone who they said, you know what, I lost half my account because I accidentally typoed an order. I meant to buy, 250 shares and I actually bought 200 or 2,500, like an extra zero on the end. And it's tough. It's mentally defeating. If you're new, you're like, oh my gosh, any mistakes have these huge repercussions. And I've seen people, same thing with real, like a cash margin trading account or even retirement accounts. A lot of people don't have a lot of money to learn, and so they can't make these huge mistakes. And so what I've created was this little kind of environment and kind of a bundle of tools that make it super easy for brand new traders, of course, to learn how to trade, but also go back in time and back test and back trade and kind of get into some trades fairly easily. And so what I did was I put together this mentor group that lasts 4 weeks. It's like 2 classes a week, twice a week. A couple different dates and times that are posted every month. At the top of every month, a new class starts, and got a couple of those that we teach every month. And it actually works really, really well because, yes, they are semi-automated buttons you have to push, but you kind of have to understand a strategy that you are going to execute. It's friendly. It doesn't support every single possible strategy out there, but some of the more popular ones it certainly does. And we're certainly adding more in the future. But this idea to go back into what I would consider a realistic simulator, right? So forget trying to lose half of your account, trying to learn, with real money. Imagine going into a simulator, going back in time. Let's say my trading gold since August, or Tesla since October on a 5-minute chart, or gold on a 15-minute chart. Like, pick your time, pick your asset. We can go back in time and we can literally watch every single candle play out, not at the candle level, but at the tick level. So we can watch actual candles forming, and I'll show you guys that in a sec. But that's the kind of thing that really gets me excited, because why? It makes it easier for brand new traders to learn this in a safe environment, right? There's no way in this simulator you're going to lose all your money. It's not connected to real money. It's in a simulator. We're going back in time, right? And so the same buttons that you're clicking in the simulator, you can also put those same buttons on your live charts. So today, as you guys know, we have a little bit of time left in the trading time for the U.S. stock market. It'll close here in an hour or two, but ultimately you can go back in time and literally go back any asset that you can trade. You can go back in time and back trade in a safe environment in a simulator. And it's way more. I feel it's way more of a realistic connection. And ultimately, all this came to be when people would tell me, literally, like coaching students, people who've gone through my classes, they said, Matt, when I go back and back trade, I do really well. The live, I'm a giant mess, right? And what is the difference? Because a lot of people would say, oh, you need to spend more time back trading, which, like if back trading is fine, but live is not, there's some kind of a disconnect. And why do you think that is, Mike? It's because there's no emotion.
There's no real money on the line.
Right? You're putting a line on a chart, so you're going to buy here and sell here. Like that's it. There's no, like, you're not watching the price action, the candles trigger you into a trade. You're not watching it, hit your price target or your stop loss either way. And every little tick, you're not seeing the ups and the downs of course, what happens over the life of a trade itself. So yeah, it's pretty cool.
Yeah, definitely. I want to spend some time walking through that, and I appreciate you reminding me about it. The ability to go back and simulate this and test out the push button approach in a safe simulated environment is definitely worth covering.
Yeah.
So yeah, let's see it. Let's see this thing unpack.
So what I did was I basically launched the simulator. It does open a new window, so we're sharing that screen now. And what we're looking at right now is gold XAU USD, the gold US dollar pair. And what we're looking at is I launched it and I said, let's go back to August 1st, right? So we're currently, obviously later on in the year, we're going to go back in time. We're going to get in our DeLorean that Mike has. And we're going to go back in time and we're going to go ahead and back trade this, whatever asset this is, whatever time frame we choose, whatever ticker, whatever time, like whatever data there is, we can go back and back trade. Okay. So what I'm going to do is I'm going to slow this way down, and we're going to let each little tick of the candle kind of flow through here, and we'll see if we can get this to cooperate a little bit. And what you'll see over here on the right is the candle is forming a little bit. You guys see that? Is the candle on the right. This is like really what you would see in a realistic trading environment. Now, of course, each one of these candles represents a 15 minute moment in time. And we're able to speed it up, slow it down. We can do a 3-minute chart. We can do a 5-minute chart. We can do a daily chart. We can do pretty much any time frame that MetaTrader supports on pretty much any asset it supports, going back to any testing period we want. In this case, whatever's on my screen, I said August 1st, which you guys can see here at the top, August through the beginning of December. Again, gold on a 15-minute chart. So here are the buttons. This is what push button trading is I can say I want to do a bullish, a reversal, bearish breakout, like different buttons. And these are all just toggles that basically allow me to get into a trade. And so what I can say right here is I can say I want to do a bearish breakout and click go. And what you'll see is the lines are literally thrown out on my chart, right? And so what a bearish breakout is, I'm literally saying, hey, I want to get in if and only if we break below the low of the previous, we'll say the last candle, which is right here, right? Now I'm using certain specific types of orders that like a sell stop order. I only get in if we break below. And again, order types is part of the Fumble and Bumble, like brand new traders really struggle with this. Where exactly do I put my stop loss? Where exactly do I put my profit taker? And you guys can see as I kind of adjust the resolution here, you'll see the bottom line. You can't quite see it easily, but you'll see the bottom line over here is to take profit, sell stop, and then my stop loss. So my stop loss, of course, is above because I'm short, and you guys can see now that I'm in the trade, you'll see down here at the bottom, you see the actual profit. Literally with every single tick, up or down, positive, negative. In this case, because we have a bearish breakout, we want the price to go lower. We're going to take advantage of lower moves. Now, how did I know to do a bearish breakout right here? Well, if you look at the 10 EMA, that red line that's on the chart, that tells me and gives me some insights into what's the trend. Is it trending up or trending down? It's trending down. It's not super steep just yet. But ultimately, I'm in the trade and I can literally go up here to the top and I can speed up or slow down the movement of the candles. I'm going to give you guys a quick example, and you'll see again, each one of these candles is 15 minutes, and we're kind of flying through it in about 4 to 5 seconds per candle. And as the candle is moving, you'll see my profit, of course, going up and down with literally every single ticket. Of course, I can slow it down to where it literally takes 15 minutes if I wanted for a 15-minute candle to form. Most people are like, I don't got time for that. So we're going to speed it up. And ultimately, once I'm in the trade, guess what? It's going to go in my direction. It's going to move against me. Like, all the things are going to happen. And this is as a educator, it's a pretty cool tool that we can show people. Oh, almost kiss that bottom line there, a little more. There we go. Boom. And so now I'm going to go ahead and hit pause. Now you guys saw the actual profit. Now it moves to my history tab. So now I'm seeing the history. I made a $1,200 gain. Again, back trading is not real money. This is just back testing. We're going back in time. As you guys both know, you're able to you can sneak and cheat and go look at what happened to gold on the charts and know what to do and when to do it. But ultimately, just like in the gym, if you cheat on those reps, you're not hurting anybody but yourself, right? And so that's kind of the basics of how this works. And again, it auto calculates the volume. So down here, you'll see the volume is 2.09 units or 2.09 lots. In this case, the price I got in, the stop loss, and the take profit. So SL, TP, and those were those 3 lines on the chart. And then you saw every single tick in near time going up and down. And to me, this is for a brand new trader, this is a far more superior way to learn how to trade than, trying to calculate, even with Google spreadsheets and trying to put in orders manually. I mean, this is a way, in my mind, is a far more superior way to do it.
This is super, super helpful. Main question I think people will have is, does this work for any type of historical data kind of out of the box? You mentioned that as long as MetaTrader supports it, what kind of assets could we see in here? I know you have gold USD, but
Yep.
if I'm a big futures trader, can I see the same environment for like the E-mini micros?
So as long as MetaTrader supports it, I'm not sure if they support the micros, but they do have like the indexes like NASDAQ. Depending on what broker you have, we've used 8cap and Think Markets. Think Markets has ETFs as well, but things like the NASDAQ itself or the SPX index or the SPY, so even the SPY ETF you can trade. It even gets as far as Think Markets, they support even leveraged ETFs like TQQQ. So anything that's in MetaTrader 5 can be supported. And so that also means things like, I'm going to open up my list here, what all can be traded. Things like stocks, of course, lots of stocks you can trade. Things like crypto, indexes, Forex, metals, and oil. So all of that, not necessarily futures with the micro contracts, but the index is kind of like the index equivalent. Of course, in this case, the tick size and all that is a little bit different when you're trading the index in MetaTrader 5 than an actual futures contract. That is a little bit different. But pretty much anything else that MetaTrader 5 supports, which kind of also means that, as far as I haven't found any way to trade options in MetaTrader 5, but there's tons of other things, of course, that you can trade as well. So,
well, I think that is a lead up to where we'll get on the topic of how this connects to TradersPost in a bit here. But
sure.
in theory, if you're trading the SPY or SPX as a data source within MetaTrader 5, and you send a signal off to TradersPost, we can translate that to an options contract. So you
Okay.
could
Well, that's cool.
could trade ETFs
Sure.
or stocks off to their relevant options contracts.
Sure. That's awesome. Yep.
So another question, you've got essentially the 2 main categories of trading strategies here, the breakouts and reversals, or momentum and mean reversion. I've heard people refer to the same thing in 5 different names, but I love that you've got this setup here that kind of fits either one of those molds. And what we saw here was a bearish breakout. Can you show us what a reversal might look like?
Sure, absolutely. In a reversal, let me see if I can let me see if I find one pop up on our chart if it
Sure.
cooperates here. But ultimately, like a bearish reversal would wait for a higher break. So I could have initiated that up here where I want to get short when it breaks higher and then rolls over and goes lower for a bearish reversal. We'll see if I get one here. But ultimately, if you want to like buy at support, that would be like a reversal where you need a lower move and then you're waiting for the turnaround. Actually, I have a slide. I don't know if that would be helpful I can share kind of how that
Yeah.
translates. That would
Yeah,
be helpful.
please.
So here is an example of the reversal strategy, mean reversion, kind of you can see kind of where the candle comes in. It's basically like buying at support or selling at resistance, right? And so ultimately what you want to be able to buy like a bullish. When the price action goes lower, you're going to buy and then wait for a reversal for it to go higher. That's kind of what a reversal strategy is. Of course, that button says breakout or reversal. It's a toggle. You click one or click the other. The other opposite of that, of course, is the bearish reversal, where you're waiting for a higher move first to get short and then roll over and wait for a lower move. And so that's kind of how that works with the reversal. The breakout strategy, of course, is the opposite. I consider breakouts to be kind of a continuation. So if things are trending up or trending down and you think it's going to continue for a while, that would be kind of a continuation strategy. Same thing, basically, we're going to enter and go enter as a break above a candle, continue bullish in a certain direction, or in this case on the bearish side, if it breaks below and moves lower, that's kind of the difference. And so if I was to flip back to the reversal, again, we're literally waiting for a U-turn versus a reversal versus a continuation. So those are the two things. And ultimately, people have asked me, what strategies can you use this with? Ultimately, like you can play indecision candles, you can play hammer candles, like playing a lot of day traders use VWAP. There's a lot of different strategies that you can use, but you just have to understand how the strategy relates to the button clicks, right? And so things like, how does it know what the math is for the stop loss? Well, it measures the high and the low of a candle, right? And then let's say it's $1, and so it's going to put a stop loss $1 lower. But a lot of times you don't necessarily want it that tight. You want to have a little bit of padding. Well, there's a padding setting. How much padding do you want as a percentage of the asset class? So let's say $100 stock, 0.002% would be padding. So it's a $1 plus a little bit of padding, or same thing if you're using, let's say a $2,000 asset like gold or something like that, it'd be 0.002% of the 2,000. So even though the percentage are the same, how much padding is a little bit bigger on bigger asset classes. It kind of scales up and down automatically. So
that's just I was wondering. So since it's not deciding on the strategy, just allowing you to streamline in the execution of the order. I
exactly.
imagine that your students and the other people using the bot are using it in conjunction with other indicators, right? So you can have all kinds of different
Sure.
tools at your disposal, and this is just making it easier for you to get in and out of the trade.
Yeah,
Is it
exactly.
possible to
When you
see?
attach it, I'm sorry, go ahead.
Is it possible to see any of the settings for the script? Does it
Yeah.
allow you to adjust your risk at all?
Yeah, absolutely. Absolutely. So what we're looking at right now are the inputs that are available for the push button trading. And essentially the candle number one means we're going to go back one candle. Whatever the current candle is, we're going to look back one, right? Because the current candle, like right here on gold that we're looking at, is still live and moving, but it hasn't closed yet. So you're not going to make a decision based on a candle that's not closed. They're going to go back one, right? So if I click the buttons now, it would literally get into a trade, bullish or bearish right here, right? Depending on which buttons I'm clicking. Now, the profit taker is a multiple profit taker is 1.2 times. The easiest thing you can say 1.4, you can change 1.5, like you can literally change it. And that is a multiple of risk. Risk is a dollar amount. And that, of course, is based on your skill level and your account size. We typically recommend 1% of your account. So if you have a $100,000 account, you're typically only risking $1,000 per trade. And so that's some of the inputs that are used for the actual formulas that go into we'll say the math of how this works. The stop loss padding is the 0.002. So that in this case, we're looking over onto the right over here, $1,980. So we'd say 0.002 is the padding. So it takes the high and the low of the candle with some padding for the stop loss. And then it uses the entry price and the padding with the stop loss. It uses that to calculate what the profit target is. You say, I want 1.5 times, 1.2 times. It's all, very, very easily adjustable. And then finally, there are the max lot size, which is different. Some different when it comes to CFDs. There are different asset classes that have different rules. Different brokers have different rules. So different things you can do there. The version that we're looking at right now kind of auto detects it. So I can say what the max is. I'll say 1,000. I'm sorry. I'll change it to 1,000, and then it'll auto detect like a lot size. So if I'm trading asset has a limit of 500, then boom, it'll do 500. If I'm trading something that has 900, it'll do 900. And then finally, there's a couple settings here where I say close the trade at 22:45, which is basically I want to close the trade, and this is the GMT time zone. Usually for the brokers are kind of synced on the GMT time zone. So what I'm saying is I don't want to take this day trade and turn it into a swing trade, which means no matter where it is at this time, profit or loss, if I haven't exited at my stop loss or my take profit, auto close at the end of the day. That's what that means. And then finally, the piece that you guys are interested in is how do I connect this to TradersPost? Now, let me pause there in case you want to ask me about this. Questions? Yep.
No, it makes sense to me. I think the maximum lot size is really worth covering there as well, because in theory, I think you've also specified that I might have a specific risk amount that I've set, but then the maximum lot size is kind of a backup a backup risk setting
Right.
as well, right?
Right. Right.
Because if I
Because like
accidentally
in
set my
different
risk amount,
brokers use it differently. So like in
right?
8 cap, a stock would be one lot would be 100 shares, right? So if you want to
Mm-hmm.
trade 182, you do 1.82 lots. In think markets, it's a 1-to-1. So if you want 182 shares, you say 182. And so all that does is just move the needle on the decimal and on the math as, do I divide it by 100? Is it divided by 1? Like what that is and kind of how that plays out. But ultimately, again, it's the max lot size. So if I wanted to look at something over here like the QQQ, I can right click over the asset itself and go into specification. I can scroll down. You'll see contract size is 1. So it's a 1-to-1. And then you can see it has a max volume of 500 right there. So that means I can only trade no more than 500. Obviously, if I do 501, it'll accept it and then automatically close the kick it out of the trade. Things like the SPX 500 is here. If I want to look at that, that's considered. Let's see what this is. So this has a max volume of 100, right? Of course, it's a $4,000 asset. So you have to have a big enough account to get up to some of these numbers. Things like SPY, Tesla, NASDAQ 100, they all have their own different rules. And the newest version of this that we're looking at will auto detect like what those volume is. It just pulls it out of the information that is about the asset being trading. It kind of auto detects what that is. So
Got it. So maybe another question around the settings here is once I've defined a profit taker and my risk and all of this, do you find that those settings translate fairly well to all the different symbols that you trade, or do you find that you have a different setup for different symbols?
yeah, usually on higher priced assets like gold, I might change this to 0.001, right? So just let me do the quick math on if I'm trading in 1900 and let's see, 1980 times 0.002 is basically going to be $3.96 of padding. I might have to. I only want $2 of padding, not $4 for the padding, right? And so what happens is every time I go in, this is technically the settings here for the simulator itself. So to go into the simulator, you can change the settings. The settings for the live when I put it onto the charts, I can certainly do that here. I can attach it to the chart. So there are different groups of settings depending on what you're doing. But in this case, like live, I can right click up here and go to the push button. This is what I have set for the live. So you'll see I do have 0.01 and 1.4. Those are all settings based on the chart. The other thing is I can also in MetaTrader 5, most people, day traders, would be more comfortable with, configuring their different charts and undocking these. And so you can have multiple of these, arrange your screen, use different, monitor, all kinds of stuff. Right now fortunately on my laptop, so I don't have an extra monitor hooked up to this, but you can undock these. You can do all kinds of stuff that you want to have multiple screens, and then each one has its own setting group, right?
Mm-hmm.
So I can say, okay, we're in gold over here. I want to do a bearish reversal, go, boom, right? So if it breaks above the high of this candle, it's going to get short, wait for a lower move. Same thing over here. I can say I want to see the right side of the screen, give me some spacing, and maybe here I want to do a bullish breakout go, right? And so that's basically how it works. And we're able to get into trade, and I can literally show at the bottom, what are my open trades? What's my open positions? And over here in Tesla, you'll see I have to go back a little bit lower just across that green line to get into the trade. to get triggered in and wait for a higher move. So
All right. So I got an ironic question to ask you here. So
sure.
you painted a picture at the beginning of the trader who's fumbling with the order entry in order to and making mistakes that way, and
Yep.
which really touched me because you painted a picture of me pretty accurately. But the other
I was
version of
talking about
me,
you, Tom. What do you mean?
Every good trader I know, at least.
Yeah.
the flip side of that is that when something is too easy for me to get in and out of the trade, well, I'm going to be pressing those buttons all the time, like way too quickly.
Sure.
And I imagine that this is where the other part of the package with push button trading comes into play, where they actually get to work with you, so you can help them. Like, all right, you get the fumble and bumble out of the way. Now we have to handle your emotions, so you can get your head in the game.
Right.
Could you tell us a little bit about, I mean, not to give away the secret sauce, but what are the kinds of things that you tackle with new traders in order to help them get over that hump?
Yeah, so really the very first objective is to get to 200 trades in a back trading simulated environment, right? So that's, and look, we got into a live trade. Now this is a paper trading account, of course, because you know, who knows what's going to happen live, but ultimately what happens, and I do have a tiny risk on this, but ultimately what happens is the first objective I tell everyone is to get to 200 back test trades. And sometimes you can, depending on how fast you're getting in and out, you can certainly get to that, but you have a pretty good variety of feelings of what could happen over the life of a trade, right? You want to be, I don't like surprises. That's just me. My wife surprised me all the time. I don't like surprises. She loves surprises. I don't like surprises. I want to feel like I know what's going to happen. And I would almost say I want to anticipate any problems before they happen, right? And you guys been married, you know what I'm talking about. Ultimately, though, at the end of the day, the 200 is the first objective, right? And so when you get into the simulator, you're probably not going to do 200 trades all at once. And we just did a single example. We could have kept it playing out and get into more trades throughout the day. So that's the first thing is get a feel for, is this something you'd even really enjoy? I've seen people spend thousands, tens of thousands of dollars learning something then they ultimately hate, right? We've all had plenty of people who, get a degree in something they spend lots of time and money on, they decide to hate it, right? And so the objective with the first objective of 200 trades, the idea here is what is the what is the thing you really want here? Because a lot of people say they want money, but what they really want is freedom, that money that comes from additional money, right? So traveling the world, doing what, like, most people want that, but what they think they want is money. And so a lot of people have what I've considered to be, I refer to as like golden handcuffs, right? So a golden handcuff is basically something that, like, hey, you're connected and you have a really well-paying job, which finances your entire lifestyle, but you can't stop because everything that you've built will fall apart. Right? It's a golden handcuff. And so that's the first objective, again, is the getting to 200 trades. The second objective is in a weekend, in a single sitting, grow the account 10% in a single sitting without breaking a funded account rule. So if you take push button trading, add prop firm, like we're talking about here with Think Markets or ACAP. I actually have my own funded account program that I'm rolling out. I'm doing a white label with a group, but ultimately learning in a safe environment, making mistakes in a paper trading account during the 4-week session, 8 classes, that makes it super easy. Like, it's not possible to blow up your account because it's practice, right? But being able to sit down at a single time and grow that account 10%, as you may know, in a prop firm type environment, you can literally get an account set up and funded by taking an assessment account, growing it 10%, and now the money's real, and you can do up to a 90-10 split. And so all these things kind of packaged together makes it really, really easy and attractive for beginner traders who don't have a lot of money. Like, you guys know, when it comes to trading stocks directly in the US markets, you have to have $25,000, which is the minimum pattern day trade rule. Well, when I started, I had 300,000. So that was never a problem for me. And I promptly lost a huge chunk in my first year, right? And I'm really good at doing things wrong. Like, I'm like black belt ninja at doing things wrong. But it is what it is. You learn, you live, you learn. It is what it is. So ultimately, that's kind of what happened to me. And so I was able to get into get into an actual real US stock market, actually trading stocks, because they had enough capital. Now, most people don't have 300 grand to throw into a new fun hobby, right? So a lot of people really struggle to have that 25,000. So in a funded account prop firm environment, it's a totally different game changer. If you can grow the account, 10% without breaking the rules. If you break the rules and your account gets blown up, you just get another assessment account and try again. It's not hard. But the cool part about this is being able to sync these trades that I'm doing live here, syncing them with a tool you guys might be familiar with called TradersPost. So ultimately what you're going to do is just kind of configure your URL down here. What is your webhook URL? And in this case, because some of these CFDs, the name is not TSLA, it's actually TESLA, like the company name. We had to build this translation of, okay, when we're trading Tesla, we're going to tell TradersPost it's TSLA, right? So we have this kind of translation type thing. And so you can easily add and update that. I thought about like building that in so customers don't see that, but there's a whole lot of stuff that they add all the time and be a lot of upkeep. But anyways, that's kind of the way that it works. And so that's how you can literally take these trades here in a safe, even a paper trading account, synchronize them with your real like TD Ameritrade, Interactive Brokers, Robinhood, like all the things that you guys are familiar with. You can literally do that here. So, yeah.
Got it. And since we covered the concept around how you can have multiple windows with multiple settings, then that also tells us that you should be able to set a different webhook URL for each of those as well, right?
Sure. Yeah.
Yep.
Yep.
So if I'm trading gold through, we'll call it, TD Ameritrade, but I'm trading Tesla through TradeStation, I could set up two separate webhooks and route
Sure.
those orders through
Yep. Absolutely.
two separate locations. Love it.
Absolutely. Yep. And you can see kind of some of the tabs around the bottom here. You can see, I can have Tesla on a 1 minute, AMD on a 15 minute, gold on a, SPX 500. Like you can have all the different things. And the default, there's all types of ways to go in here and customize the theme here. The default is, I think, green on black, like this color scheme, which kind of reminds me, you guys are old enough probably to recognize the monochrome. You remember monochrome monitors, like the Radio Shack TRS 80, like 1985, whatever.
You just teleported me to 1996.
1996. Okay, yeah. So you can go in and customize this. I actually have some templates. I'm like, okay, let's use my default. I prefer black and white. You can do whatever you want. But ultimately, I create a template that has the 10 EMA, which is what this red line is, and it has the 10 EMA, and I'm able to, get in and just look at when I apply it. The color scheme I like is there. The 10 EMAs on the chart, black and white candles, all that. And so I can also use the same template to go into the simulator as well. Mm-hmm. So I have some preferences. Yeah,
that's great.
So I don't want to. Sorry, could I just ask a question? I've been wondering. So for the because you're focusing, or you've mentioned a few times, this idea of these funded accounts, prop firm trading, and it sounds like it's sort of like the best of both worlds, right? If you have a strategy that's working, if you have a mastery over your emotions or a system that works, you can then get access to funds to be able to trade something that you wouldn't be able to trade otherwise. Also, if you don't have a good strategy, you're not well managed in your own mind, then you basically have this automatic stop loss where the account's going to be taken away from you and you have to pass the assessment again. So you go through this process through.
Right.
Do you see what would be the advantage then of like, why would anyone not try to have a funded account if they're trading at all? Sure. Even if they are trading their own assets, doesn't it make sense to have one?
So there's advantages and disadvantages. There's a bunch of different rules for how funded accounts work. I can talk to mine, the one I'm familiar with. And the main thing is, number one, you have to grow the account 10% without having a 6% drawdown. That's like a trailing drawdown based on your highest end of day balance. So let's say in your real money account, you lose 7% and then you make 30%, right? In a funded account, you would stop at 6%, have to start over, right, with a fresh account, pay for another, funded account and start over, and then have to grow that again. And so that's kind of there's advantages and disadvantages. I've heard people argue why funded accounts are stupid. I've heard people say, "Oh, for new traders, it's brilliant because you're literally like you can take high risk in a very limited risk environment, right?" So if you get, let's say, a $50,000 funded account and you pay $500 for it, if you blow it up, you didn't lose 6% of your real 50,000. You only lost 1%, which you paid 500 for. Does that make sense? And so you kind of have some leverage there, like a 6-to-1 type. You can blow up a lot of accounts, and then once you get it funded, you have the ability to say, hey, I want to do a 90-10 split, or a 75-25 is the default. And so you can request a payout, pull money out, and that comes to you as like a 1099, miscellaneous income. So there's advantages and disadvantages. I've heard a lot of people say, hey, the funded account, I need a little bit more than 6% wiggle room. So I'm like, well, there's another company I know that we can integrate with and send all those trades, real money, the trades through like a traditional broker with real funds at risk, right? And you can kind of do that as well. But yeah.
Okay.
Very cool. I guess maybe one way to look at the funded account is it's a little bit like a margin or a futures account, because there is some leverage inherent to the amount of money that you've put into the account, right? If I spent $500 for a funded account to access 50,000, it's a little bit like having a 100-to-1 leverage in a sense, because but there's more control there, right? In a margin account, I'll have margin requirements, but you're saying I don't have any ability to have greater than a 6% drawdown. Otherwise the account is liquidated, or I'm revoked
closed.
access to it. Right.
Yep.
Yeah.
Yeah.
So,
but let's say you have a $50,000 account. The $50,000 account could have like a 5x buying power, right? So even though you have a $50,000 account, you kind of have like $250,000 of buying power, even though you really only spent $500, right? And so obviously fund accounts make no sense unless you know how to trade, and you're able to get in and get an account funded and then do the splits. A lot of people struggle with the funded accounts, but even if you blow up 3 or 4 or 5, and I actually do interviews with people who get their accounts funded. I do multiple interviews every week. But ultimately, at the end of the day, I still feel like even if you blow it up a lot, would you rather lose 6% of your $100,000 or $50,000 real money account multiple times, or do it in a safe environment where you're what you paid for the account is the max you can lose? Like that's kind of how I see it. It's like there's advantages and disadvantages, but for a brand new trader, being able to say, hey, sign up for my class, and I'll give you a paper trading account just to practice. It's not an assessment account, which means if you grow it 10%, it does not be. And I've had a lot of people grow their paper trading accounts 10%, and they wish it wasn't a funded account and it's actual assessment account, right? That happens, but it is what it is. But that's kind of that's how that works. And ultimately, the like how I even arrived here was people, as you guys know, I actually do bot trading as well. And people would say, how do I use your bots and manually make decisions on when and where? And I'm like, well, I guess I'd have to put buttons on the screen that you click, and here we are. That's kind of what's become of push button trading. So, yeah.
That makes sense. And I think it's a fantastic product for those that are that prefer to have some discretion over their trades. But they want certain aspects of their trading environment automated, and this is the perfect opportunity for that. Automate the risk management, automate the size based on volume, based on the size of the candles. There's a lot of calculations here that you're taking out of the hands of the trader, so they can focus on the signal itself, which is the main discretionary aspect, and then their emotions hopefully play less of a role through execution, as long as they don't mess around with their take profit and stop loss zones. Have you dealt with any students that keep trying to mess with those zones?
Of course. Yeah. The good thing is in the simulator, you can't adjust your stop loss or take profit. Like you can't, it's not a way to do it. In the live trading, you can't adjust it, but that's why we try to get them to 200 back trades in the sim environment over the course of, several weeks. But yeah, people do. I mean, if someone's going to sabotage himself, there's only so much I can do to prevent it, try to minimize it. But the way that the entire program, the training program is scheduled, is that we actually have every class kind of builds on the previous, right? And so if you miss it, then it's recorded, but it's an hour twice a week. Usually a little bit out, maybe a little bit more than an hour. And so it builds on it. And we literally have like meticulous standards. In each class, we have like, here's exactly what we're going to go over. And then the instructor, whether it's myself or someone on my team, we have a actual guideline of here's what we're going to teach you how to do in this class, right? So it's not like, hey, we're just going to have a conversation about trading and I'm going to show you what I'm doing. That's what a lot of education companies do. And like, oh, we'll teach you a strategy. And like everyone has a strategy. Everyone swears their strategy is the best. But ultimately, I feel like this gives me and my team a technology advantage that other educators won't have, right? And so I'm not only able to help new traders kind of shorten the learning curve to getting up and being profitable, whether it's 6 months before, now it's short. It's definitely shortened. How much, it's yet to be determined how short the learning curve is shortened because of having some extra technology tools. But at the end of the day, I feel like this is a huge advantage for new traders. Even as we went through the simulator, right, you guys could see every little tick up and down, waiting for the order to get filled, waiting, right? And so 200 back trades can give you a pretty good idea of how all this plays out. And you get a good feeling for what happens over the life. What are all the things that could happen over the life of a trade, right? Most people are like, hey, pay me and I'll teach you my strategy. But there's little to no follow-up there. It's just not an awesome experience. So
good to know. Well, could we get some detail on how people can get started, where they can go to learn about push button trading and the course that you're offering?
Sure, absolutely. Okay, so I got a video. I'm actually rebuilding this, but this is basically you learn how to trade with push button trading, and these are all the assets that you can trade, including Bitcoin, which has been kind of on a pretty good run the last couple months. Yeah. So Think Markets is the broker that I'm working with right now, MetaTrader 5, and it kind of talks through this. But ultimately, I have different instructors. I actually have 3 more people who told me they want to teach a January class, work with us. And so ultimately we have different strategies. That's what happens is we have a hammer strategy, we have an indecision strategy. And what the idea here is we teach you one strategy. We don't focus on here's 17 things you're going to learn how to do. One strategy, 4 weeks, twice a week, boom, you go through it. And then of course you're able to learn one strategy. If you want to take another strategy from a different person or a different date and time, you absolutely can. And so what I'd love to do is have like a portfolio of strategies that people can learn. Not too many that they're confused and they need like a guide to tell them what they need, but a handful of choices, right? And of course, it includes the MetaTrader 5, the simulator, which is the visual mode inside MetaTrader 5, the classes themselves, some free online resources, and then a paper trading account so you can practice. And so you get that market data, the historical data, all that. You're able to do that. And then, of course, integration to you guys' favorite tool is TradersPost. Of course, that has its own separate fee, but ultimately that's kind of how this works. And there's several benefits here, of course, that we've talked about: the back trading simulator, the live trading. You can unlock some trading capital, and then you can sync some trades with traditional brokers like TD Ameritrade, Interactive Brokers, TradeStation, Robinhood, Coinbase, and more. So.
Fantastic.
Yeah, and I can give you guys that URL, but it's pushbuttentrading.co.
Well, thanks, Matt, for covering all this. I'm excited to try it myself. I've been trying to get more and more into MetaTrader 5 lately since you have been turning me on to it.
Tipped you off to it. Yeah.
I will have to reach out when I finally made some progress. I've got my own EA I'm trying to put together, but the work here you're doing for push button is super cool. I want to give it a try myself.
Sure. Yeah, that'd be awesome. So here's the kind of the class outline, kind of what we go through: 1, 2, 3, 4, 5, 6, 7, 8 classes, and kind of put it all together in a final. And then there's some FAQ. And again, here's how you can sign up for it. If you have any questions, you can book a call with me, 15-minute little Zoom sesh, and we'll do what we can to help you. I got quite a few people already signed up for our January classes, and I'm super excited to help new traders. I'm not just trying to pitch them here, buy my thing, right? We actually take attendance. We do what I call kind of wellness checks, or we check in with people throughout the 4 weeks. How's it really going? Don't BS me. Tell me where you're struggling, right? Like really trying to help people go from not knowing something to be able to trade, and or if they want to do all this and they're sync to TradersPost and be able to use their real money traditional brokers, they're able to do that. So, yep.
Yeah, I feel like there's so many courses out there these days. You could find a whole bunch of them on Udemy, and you're never really going to be in touch with the creator of that course. Sure. And I don't think they're going to handhold the way that you do, Matt, with your level of expertise. So that's fantastic to hear that people get so much value out of something like this.
Cool, guys. Well, thanks for having me.
Yeah, it's been a pleasure. Thank you so much for that.